Hey, what's up guys? Welcome to another video from Worksmart Industries TV. I remain your host, Gabriel Odok, on this channel. Today we'll be talking about a lot of things. I have good information for you guys. Information is key as it helps you prepare. So I have information about something that I think is going to happen, and that's why I think Bitcoin is going to go less than $9,000 by 26th of January or about that period. We'll also be talking about our new cryptocurrency trading course that we're launching, and another project what Smart Industries is launching, and that's our free crypto trading signals channel. So I think that and the market roundup, it's just going to be a short video, and we'll try to stay on point. So straight to why I think Bitcoin is going to go to $9,000 by 26th of January. I was doing my research, and normally I just check the net for cryptocurrency news so as to come up with a good video for you guys, of course. And I came across this article on TradingView. So this article was made by Nico Musel for acknowledgement's sake, and he thinks Bitcoin is going to see a new low at the 26th of January, and from his chart, he thinks it's going to go beyond $9,000 or below $9,000, and I agree with him because the cryptocurrency space and every financial market basically is based on psychology, and it's always patternized. Things that have happened in the past have a high tendency of reoccurring in the future. So he was able to come up with a pattern of Bitcoin prices in the recent past that relates to the Bitcoin futures that were launched. The Bitcoin futures, if you were not part of the space, was launched at about I think November, also December, and it caused a parabolic spike in the price of Bitcoin, and it has since then been affecting the price of Bitcoin. Of course, the volume traded at the futures exchange is not so much to push the price of Bitcoin the way it does, but much that happens in the financial market is based on human psychology and the crowd mentality and the sentiment of the crowd at the time. So this has affected the price of Bitcoin appreciably in the past, and he thinks it's going to affect it again in the near future, which is around 26th of January. So I'm just going to go through what he has here. And he says, all right, hear me out on this theory. On 20th of November, announcements were spread about the Bitcoin futures launch on CBOE and CME. Shortly after that, prices started moving up strongly and market cap goes parabolic. And what's happening? Big players who plan to go short on BTC when the futures are launched. After the launch on CME, we see a huge drop in Bitcoin, minus 7%, down minus 7%. And on January 17, the CME futures expired and coincidentally aligns perfectly with the lowest price for the year. At the same time, BitConnect went belly up and needs to sell off a mass of BTC. And also about this period, people were talking about the Asian holidays and something that was the cause of the price of Bitcoin plummeting. That people were selling off their cryptocurrencies to buy gifts for their families and friends in Asia. Of course, whenever something happens in the crypto space, people try to find a lot of excuses for them, but you just sift through the excess information and get what's important. Like I'm sieving through this now for you guys. So where are we now? Since the low, we have retraced to the previous 13K support zone, which should now serve as resistance, red zone on the chart. So I'll just go back to the chart and show you that. So this is the support zone of 13,000, between 13,000 and about 12,000. 13,000 and about 12.5. That's where we've been hovering for a while now. We just keep on going to previous to support zones of 9,000. Then we bounce back to that somewhat consolidation zone of between 13,000 and about 11,000. So that's where we've been bouncing up as Bitcoin. I'll go back to the article now. So since the low, we've retraced to the previous 13K support zone, which should now serve as resistance. Previous support turns into resistance. That's like trading 101. So seeing what happened on the day CBOE futures expired, we assume that a lot of big money is short on BTC and they are willing to sell off more of BTC to achieve their goal, given that the CME is one of the biggest exchanges and that the contract size is 5 times larger than the CBOE contract, together with the fact that we saw a big sell-off on BTC. Once the CME Together with the fact that we saw a big sell-off on BTC once the CME futures were launched, I think it's safe to assume that they will want to maximize their profit by pushing price lower. Combine that with previous support, now resistance zone that we have around 13K. It increases BTC price to drop from here, or increases the chances of BTC price to drop from here. CME futures expires on the 26th of January, or at least that is when the price settlement will be fixed and profits or losses are determined. So in my opinion, on that day we might see a test of the level where it's all the confluence of technicals. Could it go down more? Absolutely, but they need to have the BTC to sell off and drive down the price. And given that I think they only started investing when the news about futures came around 8K, I think it's safe to assume that the price will not be driven lower than that. What this guy is trying to say is that for you to push the price of something down, you need to have it to sell it at a cheaper price. The CME futures, or the futures market, is being traded like a margin market, so it's all about price prediction rather than negativity or positivity. What do I mean by that? It's more like the Forex market also. It's all margin trading. So something is traded against another thing. And if you say this one is going down, or if you predict that this is going to go down and it eventually goes down, you make profit, whether or not the entire market is losing. So if I'm trading on the futures market and I say BTC is going to go down, or I buy certain contracts that I say BTC is going to go down by $5,000 from $13,000, it's going to go to $8,000. The average man there on the street is losing because the value of his BTC is going down, but I make money because of my correct price prediction. So what he meant by they need to have BTC to sell off and drive the price down. It means you must have those contracts to be able to sell them. And the CME futures contracts were launched around when Bitcoin was about $8,000. And that's when these big players or the smart money could started buying up these big contracts of Bitcoin. So it's very unlikely that they are going to sell beyond that point, which was the point in which they acquired these contracts. So I think it's safe to assume that price will not be driven lower than that. If I'm right, we should see a big rally up from this zone and be near or even above the December highs by the time the next futures contract expires. Why up? Simply because there is much more profit to be made from the upside than from the downside when we reach that level. And secondly, if they would drive price further down, faith in crypto could be lost, and they certainly don't want to kill a potential cash flow. So what it's saying is that from this 8,000 point, we are most likely to see Bitcoin shoot above the December highs of $20,050. I think that was $20,050 or $20,080. So he's predicting that we are going to nosedive to about $8,000 or about around that zone, which I safely say it's going to be at least below $9,000. Then from there we are going to see a spike or a steady spike, not a steady spike, a steady growth from $8,000 up and above the all-time high of Bitcoin of about $20,000. So he also adds a disclaimer here that this is only first time we are seeing futures in the market, so and all the above he has explained might all be coincidence, and his prediction might be totally off. So I think this is going to happen, and I don't think it's going to happen just because Bitcoin, or because these smart investors or the people playing in the futures market have a lot of Bitcoin, or the quantity of Bitcoin has the quantity of Bitcoin they have has an effect on the total market cap of Bitcoin. It's going to happen because of trading psychology. The market works based on sentiment. Fundamental analysis and sentimental analysis have a very, very strong power on the market. So Bitcoin is going to tank towards at least below 9,000 within the next 5 to 7 days, I think, because when this news gets out there, you're getting first-hand information. Bitcoin is currently trading above $11,000. You're getting the information today, and I'm preempting you. But this news is going to get out there, and people are going to see and perceive this the way it sounds, or the way this young man has been able to describe it on this trading view chart analysis. And what's going to happen? The whole market is going to react towards this. So my advice for you is, you could move to Tether, or you could sell off to fiat, that's paper money, and hold and wait to buy the dip. Personally, I'll buy my dips from 9,000, I think lower 9,000, maybe 9,100 and maybe 9,000. I won't wait till 8,000, because you could miss those dips, and the next time you check the charts, you see Bitcoin at $10,000 and it's going back up. So I'm going to look for those dips. Then these periods when Bitcoin goes down, Bitcoin is a very powerful determinant of the overall crypto space. Whenever Bitcoin is going down, altcoins just tank. They just follow Bitcoin. So these are the periods where I buy my altcoins for long term. I wait for Bitcoin to tank, and as it's going down, altcoins follow them, as many people try to sell off out of the market, and this sends altcoin prices even deeper than Bitcoin. And this is the time, or these are the times when I mop up my altcoins for long term. So I'll be waiting for this opportunity to buy my altcoins for long term. And one of the altcoins I recommend to you guys is EOS. I call the current price of EOS promo price. I think EOS is currently selling at a promo price. EOS is so cheap for what they are proposing to do. And I know in the crypto space it's all about speculation. Most projects are promising to do things that they might not eventually do. But there's something clinical about EOS, and that's the fact that they have antecedents, or the developer has antecedents. The developer of EOS is Dan Larimer. Dan Larimer has built 2 successful projects, BitShares and Steem. Steem is one of the most successful cryptocurrency projects currently. If you don't know what Steem is like a social media platform where you get paid in cryptocurrencies, Steem dollars, when people like, comment, or share your post. So it's like you get an incentive for being on your social media account. So for all those people that Facebook excessively, I think you have somewhere that your excessive stay on social media could earn you money. So that's Steem. BitShares is more like a decentralized exchange, or like an exchange where you could either do your initial coin offering on them, and they have a couple of other features. Now, Dan Larimer has developed these 2 successful projects, and he's working on the third one that he calls the Ethereum killer. EOS is more like an infrastructure cryptocurrency where you are able to build decentralized apps on top of their blockchain. They are offering something that Ethereum is not offering. Ethereum is the major competitor, or it's a major competitor to Ethereum. Ethereum is already established. For you to program on the Ethereum blockchain, you need to learn a new programming language known as Solidity. This is the programming language of the Ethereum blockchain. But Dan Larimer is offering to use the regular programming languages or is developing a system where you can use the regular programming languages that computer programmers are already used to program on the EOS blockchain. Secondly, or to build decentralized apps. Secondly, Ethereum is having a major problem of scalability, and BitShares is currently rated as one of the most scalable blockchains, and he's telling us that EOS is going to be far better than BitShares. So I think EOS is currently trading at promo price. If Bitcoin should go short, Bitcoin should dip, EOS is going to come at an even better promo price. So I think you should get your money ready to pack your EOS tokens when this whole chaos about BTC and the CME futures will be taking place within the next few days or weeks. So that's that about my Bitcoin below $9,000. So I'll just go ahead to show you some news currently. So this is Cointelegraph, and this is an article by Olusegun Ogundeji, one of my friends, and it says European Central Bank to discuss Bitcoin and blockchain with youth. I'm not interested in the entire article, but I want to use this to share an idea. In one of my videos, I said I see the overall market cap of cryptocurrency space reaching at least $3 trillion by the end of this year. Now, these are some of the things that gives me confidence that such predictions are going to come to place. Because when you see the central bank that are in quote against cryptocurrencies talking about ways to integrate blockchain into the banking system and the options available for the use cases of cryptocurrencies in the real world, it tells you that adoption is going to increase. And if adoption is going to increase, then the overall market cap is certainly going to increase. Also, news like this, I think this was published on CoinDex on 5th of January, where Mark Zuckerberg, it's loading. Mark Zuckerberg is talking about studying cryptocurrencies and an attempt to decentralize Facebook. Facebook has over, currently over 2 billion users. That's almost a third of the world's population. Imagine cryptocurrencies being used on Facebook, or Facebook integrating cryptocurrencies in any way whatsoever. It's going to shift massive attention to the cryptocurrency space. And trust me, I don't think the boom has started. If there's a bubble, I don't think it has started. So, guys, this is about all I have to share with you guys today. For the experienced guys, this is where you should stop at this video. I'll be moving on to our cryptocurrency trading course, which I believe if you already know much about cryptocurrency trading, you don't need that again, because I'll be teaching these guys how to be cryptocurrency traders from beginners to pro level. So if you have a friend, if you have family or friends that you would like to introduce into the cryptocurrency trading community, I will advise you share the link to this channel with them, as they should stick around. We'll be discussing a lot of things, and the contents of this course, if you were to buy them, will be what, about $200, or I think between $200 and $500, because it's highly packed with content. So from this point, we'll be talking about our crypto trading course. So thank you, the big boys that have been watching. I think you can leave now. I want to deal with the novices, in quote. By the way, don't forget to like, share, and subscribe. And we will be launching our Telegram crypto trading signal channel, where we'll be giving crypto trading signals for free. So check the link in the video description below and join the channel if you're interested. So we'll go straight to crypto trading course today. Well. Slideshow in a moment. So this is our free crypto trading course, and we'll be teaching you how to be a cryptocurrency trader from beginner to pro. We'll be having the course in 4 parts: part 1, part 2, part 3, and part 4. Part 4 will be about introduction to cryptocurrency trading, and we are going to take just 2 points in part 1 today to keep the video short and brief. We'll be doing the course as we go along. Expect the videos at least every Sunday, the videos on the course every Sunday, and if we prepare anything before Sunday, we'll also let them out. But expect them if you're looking for a timely period to always get the course. Expect it every Sunday. So subscribe and hit the bell button so you don't miss any notification of our videos. Go about your daily activities, continue your day job, and you're learning cryptocurrency trading for free, part-time. So this is it, and after the course, we'll be setting up a mastermind group to help you set up everything that you will need for the trading. So we'll go straight to part 1 today, and that will be introduction to trading. So today we'll be taking what are cryptocurrencies and what is trading, and maybe who can trade if we have time for that. So what are cryptocurrencies? Cryptocurrencies are a peer-to-peer decentralized system of payment where people can exchange currencies or can pay peer-to-peer without involvement of the central banking system or a third party in general. So these currencies are built or are used to power the ecosystem of decentralized networks built on the blockchain. The concept of the blockchain is very complex, but I'll summarize it by you understanding that, or by making you to understand that it's immutable, or it's as of now unhackable. So it serves as a good repository or an authentic repository of information that cannot be changed over time. So it has solved a lot of problems in virtual currencies, double spending, sending money across borders, and decentralization in general. You need to do a lot of reading to understand cryptocurrencies and the entire concept. I am still learning. There are a lot of things to learn: proof of work, proof of stake, and so many things. So that's that for cryptocurrencies. The most popular cryptocurrency is Bitcoin. It was founded by an anonymous man known as Satoshi Nakamoto in 2009. And since then, it has grown steadily in price and is currently trading at $11,000, somewhere just above $11,000 today. There are other cryptocurrencies other than Bitcoin, and the popular ones include Ethereum, Litecoin, Ripple, Dash, Monero, Zcash, Zcoin, EOS, Verge. There are over, I think currently CoinMarketCap has about 1,700 coins. All coins outside Bitcoin are known as altcoins for short, meaning alternative coins or alternative cryptocurrencies. So all of them, anything other than Bitcoin in the cryptocurrency space is known as an altcoin. So what is trading? Trading is as basic as trading you've known anytime, and that's buying and selling. What we do in this space is we buy and we sell. Whether it's in the futures market or it's in the margin trade, or it's in margin trading, or in the Forex market, or in cryptocurrencies, all you do in trading is buying and selling. And how do you make money from trading? You have to buy low and sell high. That's basically the only way to make money from trading. So I buy this pen at, say, $20. I wait for the value of the pen to climb to about $30 and I sell it. And I use the $30 to buy 2 pens or two other types of pens at $15 each. So I have 2 pens now, and they both climb to $30, and I sell both of them at $30. That will give me $60, and I've made almost 200% of the initial $20 I started with. So that's the basic ideology of trading. You buy and you sell. And how do you make money? You buy low and you sell high. As simple as that sounds, you will be amazed at how many traders do the opposite. buying low and selling high now. Some people consistently just buy high and sell low. So these are the things we are going to be looking at in this course. We are going to be teaching you about trader psychology. We are going to be teaching you how to identify those good points to buy low. People keep making statements like, I buy the dip and it keeps on going deeper. That's because you are not recognizing the appropriate dips. So that is what we will be tackling in this course. So trading is buying and selling. You buy low, you sell high. Who can trade? Anybody can trade. Anyone who is learned can trade. As long as you're internet savvy, you could use the internet. If you're living in the 21st century and you're doing 21st century things, you can trade. So how many types of traders do we have? We have short-term traders, mid-term traders, and long-term traders. This course is focused on short-term trading and mid-term trading basically. Long-term trading doesn't require a lot of expertise. The only thing needed in long-term trading is research. So you just research on a good product or a good currency, you buy it and you wait for it to explode, or you wait for it to get adopted in quote, and you sell. So how soon should you trade? I don't think there's no time limit to when you should trade. There is no hurry in trading. Learn what you need to learn and learn it very well before you enter the market. So I will stop there for today. On our next video, we'll be continuing on what is traded, charts and candlesticks. But before we go, I'll look at trading terminologies. I think this will help you, and this will help you to get abreast with the matter on our next videos. So this is trading terminologies. Just 1 second. Yeah, we are there. So these are some crypto trading terminologies and meaning. I'll link I'll put the link to this site on the video description. So you just hit the link after this to learn more about these terminologies on your own. So altcoin, as I told you earlier, is any cryptocurrency other than Bitcoin. Abstract means a situation where you lost all your money. A backholder is a person who buys and holds coins in large quantity, hoping to make good profits in the future. And that is more like a long-term trader. Bearish means negative price movement. BTFD means buy the fucking dip, an indication to buy a coin when it has dumped so hard. Bull or bullish means positive price movement. So when you hear a statement like the market is overall bullish today, like let me see the cryptocurrency coin market cap today. Coin market cap today is you can see red everywhere, -6%, -4%, -9%. Bitcoin is trading at $11,800, down -6%. Ethereum trading at $1,000, down -4%. Ripple at $1.42, down 9%. Bitcoin Cash 4. So overall, the market is entirely red. This is what is known as a bearish market. Everything is just going down and down and down. Oh, of course, my magical EOS trading at $13, down 8%. In the last bloodbath, EOS traded at about $8. So that was a good buy. If you bought that time, you should be sitting on almost 60% profit by now. That's the beauty of buying the dips. So this market is overall bearish. Everything is just down, and going down. Everything is red. So that's what we mean by a bearish market. So bearish means negative price movement. Bullish, positive price movement. Dildo, long, green, and or red candles. We'll be talking about charts and candlesticks in our next video. Dump, to sell off a coin. Dumping, downward price movement. DYOR, do your own research, very important. FA, fundamental analysis. FOMO, fear of missing out. FOD, fear, uncertainty, and doubt. Hold a position, meaning hold on for your dear life, HODL. JOMO, joy of missing out. Long, more like bullish or margin bull position. MCAP, market capitalization. Moon, when you hear a coin is going to the moon, it means we are expecting a continuous upward price movement. OTC, over the counter, pump, upward price movement. Search candle, huge green candle. Shitcoin, a coin with no potential value. There are a lot of them in the market. Watch out for them. Margin, short, margin bear position. Swing, zigzag price movement. TA, technical analysis. Wrecked, when you've had a very bad loss, like losing up to 40% of your portfolio. It happens a lot of times. So, and it's happened to me. It's happened to a lot of traders. So it's nothing new. You could always recover from them. Reverse indicator, someone who is always doing wrong, someone who is always wrong predicting price movement. I think that there's a type with them. Someone who is always predicting price movements wrongly. That's a reverse indicator. You'll be meeting a lot of them in your life. Anytime they tell you Litecoin is going to go down, Litecoin immediately shoots up. And anytime they tell you Litecoin is going to shoot up, Litecoin plummets. So RSI, relative strength indicator, we'll be looking at this in our technical analysis section of the cryptocurrency trading course. Will, a very wealthy trader or market mover, usually hold about 100 bitcoins and above. So that's that about cryptocurrency trading terminologies. As we go on during the course, you tend to understand these terms better and you get to appreciate them better. So this is where we'll stop for today. On our next video, we'll be talking about charts and candlesticks, and we'll be entering part 2 of our course if possible. So stay subscribed, guys, and hit the bell button to ensure you don't miss any of our upcoming videos. Don't forget to like, share, and subscribe. Thanks for listening. Leave us with comments and reviews. We listen and we appreciate your feedback. Thank you very much and see you all soon. Bye.